Hello, hello, hello. This is Lana, financial coach based here in Atlanta, Georgia. I'm going to share with you three things that you should look at when you are choosing the investments for your 401k. I've found myself having this conversation with about two or three clients as of late. So I thought I'd make a little video and help you with it as well. So I'm going to share my screen here. We're not going to get overly complicated. Okay. Like I said, three things, and let's take a look. Okay. All right. Okay. So this is, so that you know, this is Vanguard. They're a mutual fund company. I'm not promoting them or anything. It's just one I pulled up and they happen to have the information that I'm looking for. And so therefore we're going to look at it. All right. All right. So three things. The first thing you want to look at is the asset class. Okay. The asset class. And let's scroll down and look at that. Okay. And so the asset class is really how your funds are invested. All right. And so, for instance, you can see you have money market. Right. And money markets is just like you're at a bank, right? Your savings account, your money market account, etc. So basically your money is sitting in cash. Okay. That's basically what that is. Right. So if you just kind of want it to sit and it's not making much of a return, that's where you're going to put your money. Next, you'll have like bonds. Okay. That's an asset class. And so you can see here. And again, keep in mind within each of these, there are tiers. Okay. And we'll kind of dig into that just a little bit. So here are your bonds. So if you want to, if you're more conservative, if you're looking for income, okay, usually an advisor is going to suggest that you put your funds in bonds. Okay, so there's your bonds. And then again, remember there are classes within that. So here you have short-term government bonds, right? You can have corporate bonds, okay? Municipal bonds. So, but just remember that's conservative, usually more income-based. Then you have balance, right? And balance is kind of a mix of conservative and risk. Okay, balance, conservative. So you would find like bonds and stocks, a mix of bonds and stocks in a fund like that. Okay, so if you're like, oh, I kind of ride the middle, right? So balance is an area that you probably want to look at. Okay. And then we get into the stocks. All right. And so notice that these are going from conservative, okay, into more risky. And so here are your stocks. Now, for instance, this one is large cap blend, but large cap is generally your bigger companies, right? Your big Fortune 500 companies. So the way I say, think about large cap is, just like go to the grocery store, go to the hardware store, and you're going to find like GE, Procter and Gamble, those big old mammoth companies, and those are generally large cap. And then, your mid cap, and then you'll probably have small cap. Small cap is usually like newer companies, more risky, say industries, right? We can think of some industries that are new, a little more risky. They haven't been around for a while. And so those are your small caps. So keep in mind, as you go down, the more risk. Okay. And then you get international. Okay. And international, the reason that they're down kind of in this risk category is because, we really, as say Americans, have absolutely, well, we do, but we won't get into that. But, you don't have much control or insight into what other countries are doing, right? And so, you have international. So again, the reason this is important is because, it's your risk tolerance. What's considered your risk tolerance is how much risk do you want to take? And there should be a test or a form that you can fill out within your mutual fund within the website that you help you determine your risk tolerance. Okay. So again, so you have cash. All right. You have bonds, very conservative income. You have balance, right the middle. Okay. You have stocks. Okay. All right. And then international. So, most people go, I'm going to put 25% here, 25% here, blah, 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 blah. Okay. If you want. All right. That's what I've seen people do. So asset class. So that's really important. So if the market's doing super, super well and your 401k isn't, look at the asset class. Okay. I mean, are you in bonds and it's stocks that are doing really well? Okay. See where I'm going there. All right. So what's next? Next, you want to look at what's called the expense ratio. Okay. And the expense ratio is how much you're paying in expenses. What is the cost of this fund that you're in? All right. So here, you're looking at your money markets. All right. And this one, the cost is 0.10%, and this one's 0.15. So, if you're like most people, well, let's look at the lower cost one, because the more fees I'm paying, the less money I'm getting in my pocket. Right. And it's good to look at that within the same asset class, because you're comparing more apples to apples. If you do a mix, they pick, a little bit here, a little bit there. You can even compare, say your money market versus, a more riskier one, like say this large cap stock is 0.04%. Right. So anyway, but you want to look at how much it's costing you. What is the expense? Okay. So that's the expense ratio. So if you go to bonds and you see this one's 0.2%. Okay. Right. Funds. This is what we're talking about. And then this one's 0.06%. Right. And so we're going to help you. I'm going to share how to determine, flesh that out even a little more. Okay. And so you want to look at that expense ratio, like look at the difference. It varies what is considered a good expense ratio. Personally, if I see under 0.5%, I'm usually looking at that investment. If it's over that, it better really, really, really be performing well. So speaking of, next, you want to go to the average annual returns. And what this is going to tell you is how well it's been performing. Okay. So you usually have year to date. Okay. So that's, it has the date 6/17/2021. So as of today, how has it been performing for 2021, and then your 1 year. Okay. And I usually don't look at 1 year. I go to 5 years, 10 years, and since inception, right? So since the fund has been in existence, how has it performed? Okay. So remember, we are looking at asset class, right? And then we looked at how much, what's the expense? How much is the money market cost, right? So this one's 0.10 and this one's 0.5. Well, let's see how they've been performing. So money market, the lower cost one has been this year 0.01%. And keep in mind, interest rates are really, really low. Okay. The 5-year, 1.26%. Okay. Right. And then the 10-year, 0.69, and since inception, which it's been around since 1989, about 3%. All right. So this one's lower cost. Okay. Got that. And it's been performing better than the higher cost one. So ding, 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 ding. This is the one that you will choose. All right. Okay. So that's what you want to look at. Asset class, expense ratio, average return. And again, there's other things, but those three should really help narrow things down for you. I hope that was helpful, and I'll see you next time. Bye-bye.